Oil prices are on track to decline for the third consecutive week as concerns over global economic growth outweigh supply fears caused by the crisis in Ukraine. The international crude benchmark Brent is down 4% in the last 7 days and is now trading around $106 a barrel. Crude prices have already given up most of the gains made since the start of Russia's attack on its neighbor. The drop is partly due to moves by the U.S. Federal Reserve, which is aggressively raising borrowing costs to tame record-breaking hikes in consumer prices. That's expected to crimp the purchasing power of American households and businesses. Meanwhile, coronavirus-related lockdowns in major cities like Shanghai in China are also dimming global growth prospects.
Financial tightening because of the need to counter inflation, hitting countries with high debt the hardest, frequent wide-ranging lockdowns in China, causing further bottlenecks in global supply chains. These are additional dark clouds weighing on the global economy.
Now, for more on this story, let's go to David Madden. He's a market analyst at Equiti Capital in London. Welcome back to the program, David. Now, why is demand such a big concern right now? What kind of economic slump are we facing because of higher rates out of the Fed and the slowdown in China?
In the near term, I don't think the economic slump is going to be too severe. We already saw the global economy cool a little because the kind of post-pandemic boom is coming to an end. That was already the case at the beginning of 2022. We saw a rapid increase in the cost of living in numerous countries. Take for example, the United States, the headline inflation rate is now at its highest level in 40 years. This is going to kind of eat away at demand. Now, I don't think in the near term it's going to become very apparent, but say 3 months, 6 months, 9 months down the line, we'll then see the issues that are taking place right now eat away at demand. That being said, you mentioned about the price of Brent crude oil. It has certainly pulled back from the highs of say early to mid-March, when concerns about major energy shortages because of the situation in Ukraine. We had Brent crude around then up to around $125 a barrel, $130 a barrel. We're now at $106 a barrel, which obviously is a fairly large pullback from that because concerns have cooled in relation to Ukraine a little, but there's also concerns about demand down the line. But it is worth noting, though, that prior to the Russian invasion of Ukraine, Brent crude oil was around $95 a barrel. So we're still at fairly elevated levels. We're still about 10 or 12% higher than we were prior to the invasion level. So although we have seen a fairly large pullback in the price of oil in the last, say, 4 or 5 weeks, it's still worth noting that we're still about 10 or 12% above the levels we were at prior to the invasion. So that really says to us that although there are some concerns about demand, oil traders are not overly fussed for the time being.
All right, David Madden, market analyst at Equiti Capital in London. Thank you for joining the show.